What if I told you that most people will work their entire lives and still never become wealthy? Not because they're lazy, not because they lack talent, but because they were taught the wrong financial rules from the very beginning. Think about this. Millions of people wake up early. They work hard. They save money. They avoid luxury. And yet, they stay broke. Meanwhile, a small percentage of people, often starting with nothing, somehow break the system and build massive wealth. So what's the real difference? Is it luck? Is it intelligence? Is it connections? Or is there a hidden system almost no one is taught? Today, we're going to uncover the step-by-step wealth system that ordinary people have used for generations. A system so simple, yet so powerful that once you understand it, you will never look at money the same way again. And the most shocking part, it has nothing to do with winning the lottery, getting rich quick, or becoming a financial genius. It starts with something much deeper. To understand how to build wealth from scratch, we first need to understand why most people fail. Let's go back in time. For thousands of years, wealth meant land, livestock, gold, or ownership of productive assets. If you owned something that produced value, you were wealthy. If you didn't, you worked for someone who did. But everything changed in the 20th century. Industrialization created jobs. Governments introduced public education. Banks expanded consumer credit. And slowly, a new belief was installed into society. Go to school. Get good grades. Get a job. Save money. Retire. It sounds responsible. It sounds safe. It sounds logical. But hidden inside this advice is a dangerous assumption. That income equals wealth. It doesn't. Income is temporary. Wealth is permanent. And this confusion is where the trap begins. Because when people earn money, they are taught to do only three things: spend it, save it, or pay debt. Very few are taught the fourth option: convert income into assets. This missing step is the foundation of the wealth system. And until you understand it, no amount of hard work will save you. Let's look at how real wealth is created. Every wealthy person in history, whether they were entrepreneurs, investors, industrialists, or innovators, followed the same basic pattern. They acquired or built assets that produced cash flow: factories, businesses, real estate, stocks, intellectual property. These assets worked even when they slept. Meanwhile, most workers traded time for money. And here's the key difference. Time is limited, assets scale. You only have 24 hours in a day, but an asset can earn money 24 hours a day. This is why two people can earn the same salary, yet end up in completely different financial realities. One consumes their income, the other reinvests it. One builds lifestyle, the other builds leverage. And over time, the gap becomes massive. But here's where it gets interesting. Most wealthy people did not start wealthy. They started with almost nothing. What they had wasn't money, it was a system. Every wealth journey starts with control, not motivation, not hustle, not investment apps. Control. Because if you cannot control money at a small level, you will never control it at a large level. This is where most people fail. When income increases, spending increases even faster. This is called lifestyle inflation. New phone, better car, bigger apartment, more subscriptions. The paycheck grows, but the bank balance stays empty. Wealth builders do the opposite. They freeze their lifestyle at a reasonable level and redirect the difference into capital. This is step one. Create investable surplus. Not savings for emergencies, but money specifically reserved for ownership and growth. This surplus becomes the seed capital for everything that comes next. And this step alone separates consumers from builders. Once surplus is created, the next move is automation. Why? Because humans are emotional. Markets are emotional. Spending decisions are emotional. Wealth systems remove emotion. Successful builders automate investments, savings, asset purchases, debt reduction. Money moves automatically before temptation touches it. This creates consistency. And consistency beats intensity every single time. You don't need massive income. You need predictable behavior over long periods. This is where compounding quietly begins. Here's the uncomfortable truth. The wealth system is boring in the beginning. No viral success. No overnight transformation. No dramatic upgrades. Just slow accumulation. And this is where most people break. They want fast results. They want visible success. They want external validation. But wealth grows invisibly before it becomes visible. Just like roots growing underground before a tree appears above the surface. Most people quit right before momentum starts. They stop investing. They cash out early. They abandon consistency. And in doing so, they reset the clock back to zero. This is why patience becomes a competitive advantage. Once capital and automation are in place, the system enters its most powerful phase, asset acquisition. This is where income is converted into ownership. It can be index funds, dividend stocks, rental property, digital businesses, online brands, intellectual products, but wealth grows invisibly before it becomes visible. It's like roots growing underground before a tree appears above the surface. Most people quit right before momentum starts. They stop investing, they cash out early, they abandon consistency, and in doing so, they reset the clock back to zero. This is why patience becomes a competitive advantage. Once capital and automation are in place, the system enters its most powerful phase, asset acquisition. This is where income is converted into ownership. It can be index funds, dividend stocks, rental property, digital businesses, online brands, intellectual products. The exact asset doesn't matter as much as the principle. Buy things that produce cash flow or appreciation, because now money starts working for you. Instead of asking, how much do I earn? Wealth builders ask, how many income streams do I own? This shift in thinking changes everything. Here's the harsh reality. Most people never reach this stage because they underestimate time. They overestimate speed. They quit too early. They expect results in months. Wealth systems operate in years, sometimes decades. But when momentum finally kicks in, it becomes unstoppable, and this is where generational wealth begins. Now that we understand the foundations of building wealth, let's look at how this system works today. The truth is, history repeats itself, and financial systems haven't really changed. Look at the past 50 years. Recessions, inflation spikes, housing crashes, stock market collapses. Most people panic and lose everything, but those who follow the wealth system we discussed, they not only survive, they thrive. Consider this. In the 2008 financial crisis, average Americans lost $11 trillion in household wealth. Meanwhile, billionaires increased their wealth by $200 billion in the same year. During the pandemic in 2020, the top 1% grew their wealth by over $3 trillion, while millions struggled to pay rent. What does this tell us? It's not about luck. It's not about timing the market perfectly. It's about systems, assets, and preparation. The wealthy build wealth in a way that protects them from cycles, crashes, and chaos, while most people remain vulnerable. Here's the pattern you need to understand. 1. Income gives spend, gives survive, a trap for most. 2. Income gives save, gives accumulate capital, the first step for builders. 3. Capital gives asset acquisition, gives cash flow, momentum begins. 4. Cash flow gives reinvests, gives protection, wealth compounds safely. Notice step 4. This is where many beginners fail. They stop at step 3. They acquire assets, but ignore protection. Let me explain. Wealth isn't just built, it's preserved. Banks, governments, and even inflation can erode unprotected assets. And here's where the hidden system really shines. Imagine you've built your first portfolio, $50,000 invested in stocks, $30,000 in a side business, $20,000 in savings. Everything looks good, until the market crashes. If you're not diversified, or if your income streams depend entirely on one source, a single shock can wipe out years of effort. This is what most people never learn. Building wealth is only half the battle. Protecting it is equally critical. The wealthy handled this through diversification across multiple asset classes, stocks, real estate, digital assets, commodities, geographic distribution, investing in different markets, countries, or currencies, insurance and safety nets, business insurance, property insurance, emergency funds, low leverage strategies, avoiding risky debt that can wipe out gains. These steps may sound mundane, but they are the difference between wealth that lasts a lifetime and wealth that disappears overnight. Once protection is in place, the final step is leverage. Leverage isn't just borrowing money. It's multiplying your efforts through businesses that run without your constant supervision, digital products or intellectual property that sell, investments that compound continuously. Here's an example. Two people start with $10,000. Person A invests in a single stock, hoping for a 20% return. Person B builds a small online business that earns $500 a month, reinvests profits, and grows it to $5,000 a month in 2 years. Who becomes wealthier? Almost always, person B, because assets at scale beat one-time returns. This is why systems matter more than sheer income or luck. To put this into perspective, in the US, the top 1% control over 40% of total wealth. Yet they don't earn most of it from salaries, they earn it from capital and assets. The median American household income is around $70,000 a year, but median net worth is under $120,000. Do the math. Working 40 years at $70,000 a year equals $2.8 million total income. Yet most Americans retire with barely 5% of that in net worth. Why? Because without a step-by-step system to acquire and protect assets, income alone cannot create wealth. Here's the ultimate truth. Building wealth from scratch isn't about chasing money. It's about creating a repeatable, resilient system. 1. Control your money. Spend less than you earn. Avoid lifestyle inflation. 2. Automate your system. Invest automatically, save automatically, reinvest profits. 3. Acquire assets that generate cash flow, don't just work for money. 4. Protect your wealth, diversify, insure, and hedge against risks. 5. Scale intelligently, leverage systems, assets, and automation to grow exponentially. Follow these steps consistently over time. And wealth doesn't just happen, it becomes inevitable. 3 clear takeaways. Before we wrap up, here are the 3 most important lessons you must internalize. 1. Income is temporary. Assets are permanent. Your salary alone won't create wealth, owning systems and cash-flowing assets will. 2. Consistency beats intensity. Slow, disciplined actions over years outperform short bursts of hard work. 3. Protection is part of growth. Wealth without defense is fragile. Inflation, recession, or unexpected crises can destroy unprotected gains. Here's the part most people ignore. Even if you follow this system perfectly, the world is unpredictable. Economic crises, political changes, and financial collapses can strike. The difference? Wealth systems are resilient, not immune. If you wait for perfect conditions, you'll never start. If you ignore risk, you'll never keep what you build. The secret is balanced growth with protection, patience with action, and control with leverage. Now that you know the step-by-step system to build wealth from scratch, here's what you should do next. 1. Audit your finances today. Know exactly how much you earn, spend, and save. 2. Create your first investable surplus. Even $50 a month matters if you start now. 3. Pick one asset class to focus on first. Stocks, real estate, or a small business, and commit to consistency. If you want, I can also make a visual roadmap for your audience. A simple, step-by-step graphic, showing the journey from zero to wealth. This kind of visual can dramatically improve watch time and retention. And if you found this video valuable, make sure to like, subscribe, and hit the bell. That way you won't miss the next deep dive into financial systems, wealth protection, and economic strategies that schools never teach. Remember, wealth isn't magic. It's a system, and systems are learnable. Start today. Build slowly, protect wisely, and let the system do the work for you.